So when did the brilliant idea come to you to set up a brokerage firm?
Brokerage was built upon how well companies could make money and not how customers really wanted to do business.
Your ads in your company for many, many years have featured your face.
My director of our advertising said, "Why don't we use your picture sometime?" I said, "Are you kidding me?" We tried one. The results were up by tenfold.
Do you have any stock tips for me? I'd look for a couple stock tips. Do you have any good ideas of what I could do with my money in the stock market?
How about an index fund?
Would you fix your tie, please?
Well, people wouldn't recognize me if my tie was fixed, but okay. Just leave it this way. All right. I don't consider myself a journalist, and nobody else would consider myself a journalist. I began to take on the life of being an interviewer, even though I have a day job of running a private equity firm. How do you define leadership? What is it that makes somebody tick? We're here today with Chuck Schwab, who's one of the best-known figures in the American business world, certainly has been so over the last several decades because of his ubiquitous face and his ads, but also because of the great company he's built, which is one of the leading financial service companies in the United States. He's now just written a book called Invested by Charles Schwab, and we're going to talk about that and his life, which is quite incredible. But let me start by asking you about something you made news with just recently. Your company announced that you're not really just going to do discount brokerage, you're going to give away brokerage for free. In other words, if I want to buy some stock, I call up Schwab, I have an account, and I trade for free. How do you make money if I'm trading for free?
Well, David, first, thanks for having me on your show. I had the opportunity to know you for a while, so I feel very comfortable being here and letting you know all of my secrets.
All right, well, tell me the secret of how you make money when you're not charging anything.
Well, a long time ago, we started taking commissions down, and that's how we started the business, with lower prices along the way. And finally, we got down to $4.95. I said, we're so close to zero, let's go there. And I always had somewhat of a passion for what the success of Google has been. They made search free, and they do very well by offering free search.
Right.
Similar in our case, we think we will do very well offering our services free for transactions, and that's the commodity part of the business. The rest of us, we give people, if you need help and advice on different kinds of things, managed accounts, banking, all those kinds of things. But the fundamental service we want to provide is free.
Okay, so I shouldn't worry about Chuck Schwab and not making money because we're service away for free.
You should not worry about it.
Okay.
We actually are giving up about 4% of our revenue in that decision.
Okay. So for those who don't really follow this, you started as a discount broker where you were giving lower commissions than the standard rates were before. Today, you've become a conglomerate, in fact, in the financial services world. You have about $3.7 trillion of assets under management. So you make your money on other financial services, is that correct?
Correct. But you know, one of the things, we are a conglomerate. We're really not in the original sense. We only focus on what can we do for individual investors and advisors who have individual investors.
So when you started doing this more than 40 some years ago, did you ever envision that you would be in more than the discount brokerage business? Did you say I'm going to build a gigantic conglomerate or not?
I did not, David. I mean, certainly we had a very limited view of where we were at the time, but frankly, we thought the original business would only would help maybe 10 or 15% of the population. People who did their own research and only wanted to have a simple transaction. As we found out, there are many, many people who wanted to help and advice.
So let me ask you about something that some people say makes you so well known. It's that your ads in your company for many, many years have featured your face.
I started Charles Schwab & Company from the investor's point of view.
I invite you to find out more about Schwab today.
Now, was that something you decided you wanted to do?
David, it started out, obviously, our company started with a shoestring. We didn't have much money. And I had a tough time raising money because Wall Street certainly didn't want to help me develop competition for them. So as a consequence, our ads were really teeny. When we first started the business in 1975, there'd be one column by 3 inches. Come and save 75% on your So people kept coming into our company. And as we grew over the next couple of years, we had some profitability along the way. We were growing very nicely. Once we had a nice article written in the San Francisco Examiner about us. They used a picture of me leaning over, as you remember, the old Bunko Ramo machines. And there I was, and my director of our advertising said, why don't we use your picture sometime? It'll show there's real people here. I said, are you kidding me? What's my mother going to say? What's my father going to say? What's my wife going to say? And my friends? You some kind of egomaniac? And I said, finally he convinced me after some conversation. He said, just try one. We tried one. The results were up by tenfold. Because I think people thought there's a real person behind this business, and I can identify him. I can certainly look for him in the post office. He's up on the wall there. I don't do business with him. I think that helped. And so anyway, my friends got over it.
But when you go walk downtown in San Francisco or anywhere in the country, but certainly in San Francisco, can you walk without having people say, there's Chuck Schwab, and come up and ask you for some stock advice or something?
Yes. Well, it happens on occasion, which I'm always honored to have that happen. But for the most part, people don't really recognize me in some sense. Maybe I part my hair differently.
So when you were starting the company in the early days, if somebody called up and said, I want to buy 100 shares of IBM, you had a broker, he or she would write down 100 shares of IBM. They then do something to go to the stock exchange.
We teletype it to the exchange
okay,
at that
teletype
time. Everything's written, everything's then teletyped, et cetera, to the central place in New York. Execution, we reversed the whole thing, called the client back. You bought 100 shares of IBM at $50 a share. But of course, very early on, we were very early adopters of a lot of technology to make ourselves more efficient. We just had to do that. And fortunately, I was close to Silicon Valley. Many of my friends were people in the valley itself, and I was an early adopter. And so we were one of the very first ones to sort of adopt internet in 1995, I think it was.
Now, one of the ways you got customers from all over the country, you had something in your mind to do branch offices. Why did you want to have branch offices?
Well, we found out early on, very early on, that at that time, about 50 or 60% of our customers wanted to come into a branch and make sure that real people there were behind the counter, that they could see that. And so our numbers, once we opened an office in a location, our numbers went up substantially.
So you had better technology, perhaps. You spent more money on technology than others. You had your face, which everybody got to like, and you also had the branch offices. But there's one other thing that really made your company grow from reading your book, it seems to me, is that you decided to do more than discount brokerage. You came up initially with an idea of, in effect, having people buy mutual funds through your platform.
Yeah, that was a big innovation.
Can you explain how that works?
When I first started the business, mutual funds were sold by salesmen, obviously. Got big commission for doing it. Up to 9% of the money invested went to commissions, and the salesman got half of that, we'll say. I thought no-load funds with no commission was the best way for an investor to go about investing, which I used some of the early, myself personally, through my IRA account. I said, this is crazy. Why can't I offer this service to everybody, a no-load kind of transaction thing? So we went to the no-load companies. They're all small. So give us a little piece of your management fee, and we'll offer your fund for free to our whole network of Schwab clients. And clients loved it.
So you were the CEO from the beginning, and then eventually you had a co-CEO, and then the co-CEO had a heart problem, and he had to step back, and then you brought somebody else in, but you at one point kicked yourself upstairs a little bit, made yourself chairman.
I did.
And then somebody else was running the company, and then it didn't work out, so then you came back in for 3 years to run it again. Was that something you really wanted to do?
2004, I came back in. I wasn't sure I wanted to, but obviously I loved the company so much. Came back in 2008. I retired again as CEO. I had Walt Bettinger take over and done a fantastic job for the last 10 or 12 years.
Right.
And but I'm always sort of hanging around as the compass of the company.
Okay.
I keep pushing the people. We're going this way, it's north.
So when you graduated from Stanford Business School, did you say, I'm going to go join a private equity firm or a hedge fund?
As a kid, I wanted to find out how could I become successful. So I found financial services was a way to go.
So one of the causes you have is something that I'd like to talk about. You've been very open about it, unlike many people that have this problem. It's called dyslexia.
Right.
And for those who aren't familiar with it, it basically means it's difficult for you to read in the conventional way that the average person
Right.
can read. But the amazing part in your book, as you describe it, is that you had it for much of your life and you didn't know you actually had it.
Right.
Can you explain that?
Our youngest son was about 7 or 8. We had him diagnosed because he had, as it turned out, all the similar and identical issues I had as a young student all the way through school. And he was now just only 7, but he had it all the way through the rest of his career. And it was a really aha moment for me to understand, yes, he got it through obviously DNA, and as a consequence, I got into it, but we both got into it, my wife and I, and we started an agency to help other parents who had identified kids with this issue. Turns out 1 in 7 people have some related issue around dyslexia, some learning difference.
So when you're young and you are dyslexic and there's no term for it yet, or at least you weren't diagnosed as that, did you just think you weren't that smart, or did your parents think, well, he's not that good a student? And how did you actually get through school?
Early on, I read a lot of comic books. I read classic comic books. They had the picture and a few words, but I got all the stories, whether Moby Dick or Tale of Two Cities. I was a wonderful student in the classics, but I got it through comic books.
But if you're dyslexic or somebody's dyslexic, does one compensate by hearing better, observing better, or being very good in math as you are?
I think it's a phonological issue, fundamentally. It's what it is. It's conversion of code to sound, and then to meaning, and then the reverse is true for writing. And because of that defect in our brain, we are slow readers.
You were not a great student, I guess, because of dyslexia in high school, but you've said in your book that maybe you got into Stanford because you were a pretty good golfer.
I was a good golfer. I don't think it makes the academics too happy that I got into Stanford anyhow. But the fact was the coach was looking for some talent in the golf area.
Did you play golf at Stanford?
I did play golf at Stanford, only as a freshman, only for a period of time, and I almost flunked out was what happened, because I was not prepared for college at that moment.
You graduated from Stanford, you went to Stanford Business School, and you did pretty well in Stanford Business School?
Mm-hmm. I did.
So when you graduated from Stanford Business School, did you say, I'm going to go join a private equity firm or a hedge fund, or what did you do?
No, I always wanted to do research. As a kid, I wanted to find out how could I become successful. That was important to me, because we came through the Depression years, my parents did, and I wanted to sort of make money and get the resources to have choices in my life. So I moved off, found financial services was a way to go. So at age 13 or 14, I began to think about this thing, stock market. Then I went to Stanford, economics, business school, all financial, investment management, all that in my early career. And then I worked after and during business school for a small advisory company. I was a research analyst, portfolio manager, and I had the responsibility and the introduction to many brokers would come and sell us their stories. So I got to know the fundamentals, how Wall Street functioned. It's all by sales commissions, and some were bad incentives.
All right, so you're doing investment reports, but then eventually you realize, I guess, that you're not going to get that wealthy writing investment reports. So when did the brilliant idea come to you to set up a brokerage firm and a discount brokerage firm?
Well, it started really in the early 70s. I saw how difficult this business was. It was built upon, brokerage was built upon how well companies could make money, the brokerage companies, and not how customers really wanted to do business. So as it became in the conversation there in 73 and 74, Congress, SEC all thought that the commission system was really not a particularly good one, particularly a fixed rate thing. And so the beginnings of the end of that started then in 74. We had the test period, and then 75, boom, we went to Mayday.
So when you wanted to start the company, did you just go down to Silicon Valley and say to a venture firm, hey, give me some money, I got a startup idea?
No, there was nothing like that available to us. I would have to go to friends for a little bit of money. I had some people in YPO who thought my business was great. And that, of course, eventually led to our deal with the B of A. I went to them to borrow money. They liked our business model so much at the time, they decided to try to buy our company, and I came from nothing, as I mentioned. And so they enticed me to sell the company to B of A. I thought that was a great thing and would enhance our reputation as a discount broker, that we were associated with the B of A, the largest bank at the time. And that was then 4 years of that before I bought the company.
Well, that
back.
sounded like a great idea at the time. B of A, which is the epitome of the establishment, is buying this little kind of renegade company, which is not the establishment. You not only sell it for $52 million, which strikes you then as a lot of money, and also you got on the board of Bank of America at, I think, the age of, what, 43?
Something like that.
You were the youngest person on the board.
And one of the largest shareholders.
The largest individual shareholder, the youngest person on the board. The establishment is there, and you don't regard yourself as the establishment. So what can go wrong with that? It sounds great.
Well, it sounded great then, but then the bank fell on some bad times. We couldn't continue to do our progression of new services. For instance, one case, we couldn't even develop our own money market funds because the bank had to get permission because they were in trouble by their operational issues and loan loss issues, that we couldn't get the Federal Reserve to approve us to do our own money market funds.
Okay.
And I thought it was time that we should get out of the company.
Well, you had one advantage in buying it back, I think. You had the right to your picture.
I did. I had a name and likeness went with me, and they could sell the companies. We finally came to terms.
Who was the clever lawyer that told you to keep your name separate? Or
I don't know. I thank him every day, let me tell you.
Right, so you bought it back for, let's say, $250 to $300 million, more or less. And so how did you feel? You bought it, you sold it for $52 million, but you then had to put up $250 to $300 million to buy it back, and you had to, put up a lot of your own money to do that.
Well, David, back then, the valuation when I sold the company to B of A, I sold for about 3 times revenue. When I bought it back, I bought it for 3 times revenue. So it was about the same. We had just grown that much in that time period. So it was a fair deal for them when I sold, and a fair deal when they sold to me.
But you did what's called a leverage buyout.
I did.
And you were advised by one of the leaders of the leverage buyout industry then and now, George Roberts from KKR. And so you had a lot of leverage. In those days, leverage was higher than it is today. So you had a lot of your net worth tied up there. You also had a lot of debt ahead of you.
I had all my net worth and then some.
So you decided to try to deleverage pretty quickly, and in the same year you bought it back, you decided to essentially go public.
I did.
That was pretty courageous. Did anybody tell you that was not a good idea?
A lot of people. I said I needed to do it. I had to deleverage as quickly as I possibly could, and fortunately we did, because shortly after going public, we had the crash of '87. And that was another complication.
Did that affect your business at all?
Of course it did. Our stock dropped from 15, was the IPO price, right on down to 6.
So your net worth went down a little bit.
Yeah, more than half. That didn't bother me. Because we still had the company, we still had the opportunity, and having been a student of stock market cycles, I knew we would eventually return to more normal times.
As you look back on your career, the most important lesson you've taken away from what you've done, is it to innovate, pay attention to technology, be nice to people?
Have a team of people that you really honor, that work with you, because you can do so many more things with other brilliance around you.
So your company now has a market value that is staggering compared to what it once was. I think your market value is about $56 billion, something like that.
Neighborhood.
Right, $56 billion, and you are the biggest single individual shareholder still.
Yes.
So you have a net worth yourself that's fairly high. What is your view on the wealth tax? Do you think that a wealth tax is going to make society better or not, or how do you look at it as somebody like me that is subject to criticism for not supporting such a tax?
Well, I think it's sort of wrong directed in many ways. I think we as a society, and you probably don't talk about it as much, I don't either, about our philanthropy. And I feel that's an obligation of all of us. I came from really nothing and had plenty of incentive to create what we've created. And of course, my wife and I have spent a lot of time over the last 20 years giving back money to different causes that we really think need improvement, whether it's education or the art world or Alzheimer's issues, you name it, we are probably supporting that.
So you're a pretty famous face and obviously a famous person. So in California, when you're famous, sometimes you say, well, I should run for governor, senator, president. Did you ever think of running for anything?
I was suggested to be appointed Secretary of Treasury one time under the Bush administration. I thought, I just can't do it. I can't put everything in some trust and so forth. And I felt that this was my purpose in life, developing a company like this. We have benefits so many people. So politics wasn't really maybe if I was king, I like to make, I guess I like to make the things happen quickly.
So today, the way you view you're contributing to the country other than paying taxes, building a big company, do you spend any time advising government officials or do you do other things relating to government?
Well, I'm obviously very actively involved in politics. I think every individual in America should have some piece in the outcome of this country, and hopefully we'll hang on to free market systems for indefinite periods of time. It's provided for all of us all the various benefits of creation of new things along the way. And I think that's what we're doing. We're at the heart and soul of free enterprise.
Now, if you look back on your incredible career, if you say, I made a mistake or two mistakes, what would you say is the biggest mistake you made that you think if you hadn't made it, you'd be even more successful?
Well, I think, David, I've made a lot of mistakes, and every mistake along the way, I think I've learned something from that.
So you have the benefit of having now 5 children?
Yes.
And 13?
13 grandkids.
Okay, so
What a great chapter in one's life.
do your children or grandchildren ever say, can you give me a stock tip or something because I got some money? I think you wrote, I think your oldest daughter once asked you for some stock tips and you just told her to just diversify.
Well, I did, but we have a mutual fund, actually it's an index fund called the Schwab 1000. I use that all the time for my kids, the ETF portion of the thing. I've taught them all about it, but in some respects it's a little bit boring. I'd rather have the kids buy individual stocks. So what I'm going to do coming up this spring, we're going to introduce fractionalization of stocks. So you can buy a small fraction of Facebook.
Or Amazon. Amazon has a high price. In
Amazon.
other words, Amazon, let's say it's trading for $1,300 a share. Some people can't afford $1,300 a share, so they could buy.
How about $130? How about
Okay, so
$13 worth?
Okay, so that's something you're going to be doing.
We're going to do it for the young people.
Okay, so as you look back on your career, the most important lesson you've taken away from what you've done, is it to innovate, pay attention to technology, be nice to people? What would you say is the key lesson?
I think have enough humility in business that extract and have a team of people that you really honor that work with you, because you can do so many more things with other brilliance around you. And I think that's one of the best things I've taken away from business, throw your ego aside and get with it, and a team really appreciates you honoring that.
Now, by the way, before we close, do you have any stock tips for me? I'd look for a couple stock tips. Do you have any good ideas of what I could do with my money in the stock market?
I think maybe you ought to consider, I know Carlisle a lot, and you've done a fantastic job. How about an index fund?